Meet James Wynn, the trader who rose to fame on Hyperliquid before losing nearly everything. His story is a sharp reminder of the risks lurking behind the promise of fast money. From zero to hero and back again. Self-proclaimed Bitcoin maximalist and high-leverage trading enthusiast, James Wynn has become one of the most talked-about figures in crypto. His bold and often borderline reckless trades made him a lightning rod for attention. But Wynn's rise wasn't all moonshots and meme-fueled gains. Monumental wins, devastating losses, and a swirl of shady allegations all became part of his legend. His journey isn't just another crypto gambler tale. It's a crash course in how the fastest climbs often end in the hardest falls. Enter the fireworks. Wynn first popped up on the crypto radar around 2020. According to a user on X named Star Platinum, he received $6,000 worth of ETH from the now defunct Alameda Research. Yes, the one tied to Sam Bankman-Fried. A few years later, Wynn was getting real attention. His X-bio boasted early investments in Pepe when the meme coin's market cap was just $600,000. In April 2023, he boldly predicted Pepe would hit a $4.2 billion market cap, a laughable claim at the time since it was sitting under $5 million. But fast forward to June 2nd, 2025, and Pepe is worth $4.93 billion according to CoinGecko. At its peak in early 2024, it topped $11 billion. Wynn's early bet turned a few thousand into a fortune. Classic rags to riches stuff, but with frogs. Born in a small British town, Wynn grew up, as Star Platinum put it, surrounded by drugs and violence. I grew up hard, scraped by week to week, snagging a 2x here and a 4x there. Then I spotted the #1 meme on iToken. I went all in, walked away with 8 figures, Wynn wrote. This is where the real circus started. There was baby Pepe. Reportedly, Wynn demanded a share of the token supply, then dumped it and disappeared. He began promoting new tokens on his accounts and private groups, including one called Elon, which rumour has it he launched himself. Spoiler, the chart flatlined. Later he pushed coins like Wynn, yes really, which also tanked. But he wasn't done. When memes aren't enough, enter leverage. Wynn pivoted into margin trading and became a Hyperliquid power user. Built on high-speed Hyper-EVM tech, the platform functions like a centralized exchange. Live order books, deep liquidity, low fees, but without any KYC. It runs a modified proof-of-stake system called Hyper-BFT, capable of pushing through 200,000 transactions per second. In short, it's fast, efficient, and quickly became a go-to for degen traders. He's been trading there since March 13th. In under 2 months, he pulled in $46.5 million in profits, noted Look On Chain. Among Wynn's open leveraged positions were Bitcoin with 40x, Pepe with 10x, Trump with 10x, Fartcoin with 5x, and Hype with 5x. By May 23, his unrealized profit had ballooned to over $80 million. He wasn't just winning trades, he was raking in revenue for Hyperliquid. Analysts estimated he paid $2.31 million in trading fees alone. In just 75 days, he placed 38 trades with a win rate of 45%. And he was loyal. They want me to trade on Bybit, but I'm not leaving HL. Not even for $1 million a month. Half the reason I post trades is to help Hyperliquid dominate. The other exchanges are corrupt. But despite his devotion, guts, and trading experience, Wynn couldn't outrun the house. House always wins. On May 22, Wynn went full degen, opening a $1.14 billion long position on 10,200 BTC with 40x leverage. By May 26, he announced his exit from the Hyperliquid casino with $25 million in profits, even though his unrealized gains had peaked at $87 million. Total capital invested, roughly $3 to $4 million. It was a blast playing the perpetuals roulette, but it's time to walk away while I'm ahead, he said. His break lasted a few hours. Soon he was back in with a new 40x long on 684 BTC, $75 million, and another on Pepe at 10x. The fun didn't last. On May 30, Bitcoin dipped below $105,000. Wynn's position was liquidated. He lost over $99 million in just 1 week, reported Look On Chain. He later admitted that a simple buy and hold approach might have been smarter. He added bitterly, "At least I proved how rigged the markets are." Before the collapse, Wynn publicly begged Hyperliquid's shadowy cabal to spare him from liquidation. They didn't. Still, just days later, he was back. 40x long on nearly $100 million in BTC. He scaled the position up to $140 million, urging his followers to buy the effing dip and blaming whales for trying to wreck him. The influencer altcoin Gordon hinted that Wynn's latest entry looked suspiciously like market manipulation. Within seconds, shadow market makers nuked the price down to $104,580. Donations, desperation, and denial. Sympathetic traders started sending Wynn's stablecoins to support his margin positions. According to the on-chain analyst Detective, at least 24 wallets sent donations, one of them nearly $8,000. Wynn had previously asked the community for help, promising to repay donors if he defeated the cartel. Still, he stayed bullish on Bitcoin, claiming the bear momentum was fading and predicting a sudden rally that would catch investors off guard. He even made a bold prediction: "I'm going to make $1 billion this cycle." But when BTC dropped again and he lost $1.5 million, his tone shifted to panic, begging for help to save the long. His position was partially liquidated, 240 BTC worth around $25 million. Then came the conspiracies. Billions of inflows and price still dumps? You long, they liquidate. Every time. You've been exposed, criminals. He ended one rant by tagging Donald and Eric Trump, calling on them to do something to save the people. The takeaway: James Wynn's saga is a masterclass in the dangers of over-leveraged and emotion-fueled trading. His story shows how betting on meme coins and swinging massive leverage might pump your bags until it doesn't. Instead of reflecting on his mistakes, Wynn leaned into drama, blame, and conspiracy. To experienced traders, it's a cautionary tale, not a heroic one. Trading without discipline isn't a strategy, it's gambling with better branding. In the volatile world of crypto, the real power move isn't going all in, but knowing when to chill.